Alright, this is just a little exercise I want to do. And for most people watching my channel, this is nothing new, so feel free to skip this. But for those that just have no idea what I'm talking about whenever I speak about anything in these videos, this is for you. So start off with a blank chart. I want you to go to your own chart, type in NQ1 exclamation mark, and then go on the hourly chart. You're going to see something like this. Okay, position your chart from the 5th of May to, well, it's about 25th now. And what you're going to do is you're going to use two tools. So you're going to use the trend lines and the vertical lines. And I want you to put a vertical line at every 6 p.m. New York time. So go to New York time and then put 1800, or 6 p.m. And then put a vertical line on that time. Basically, the market closes at 1700, it reopens at 1600. So there's an hour break in between, and that separates each day's price action. Okay, so you're basically going to split price up into days, and then you're going to be able to use that to easily see the high of the day and the low of the day. And I want you to draw out that high and low in time until price, trades above that area. So anyways, pause the video and come back to it. But in the unfortunate case you didn't do that and you just continue to watch, I've went ahead and done the work for you, which I do not encourage. You should be doing the work yourself. You'll have an easier time remembering and being able to spot it yourself going forward in the future. I won't always be there to hold your hand. But anyways, this is the first one, high of a current day, and when price gets above this area, we have a significant move in the other opposite direction. Same thing with this one over here. We go up from that point. Over here, we go up from that point, and then sometimes it doesn't work, right? Like this day low, we just continued going lower. Over here, we did retrace a little bit, but then we just continued going higher. Same thing with this high over here. And then a couple more times it didn't work. I know 3 more times it didn't work up here, but you do see that most of the time this stuff works. Most of the time when we trade above a previous day high or low, and especially in the conditions where we're moving sideways. Okay, you can look for trade setup. Now in some scenarios, price is just going up and it just won't stop going up like it's on drugs. And in those cases, it's just unfortunate that it just won't be a trade. They're just, at least for me, I have to sit back and just watch these markets trend sometimes. For somebody else, maybe it's different, but for me, at least, that's how it is. So, anyways, the way I look at these highs is I basically imagine a box above this line, and anything above this line in that box, you can use it as an area to look for a reaction from. So if we go down beneath this low and I imagine this box, like if I highlight this entire area underneath this low and I call it a buy zone, like that could be a trade idea within itself. You just take the opposite side of wherever price is going to hit the low or the high of the previous day, and then you just run the opposite once it does that to the other daily high, and then there you go. There's an example is if I bought literally when price went beneath the low, as soon as it touched the low, I bought it, and then I could sell it at the first previous day high, right? Well, anyways, let me continue to what's next. Before I move on, though, again, pause the video, take some time. Now, what you're gonna do is you're gonna remove any marked daily highs that don't have a lower daily high to the left and a lower daily high to the right. And you're gonna do the same thing for the lows, where there's a higher daily low to the left and a higher daily low to the right. Okay, so this is what your chart should look like. For example, this one, you have a lower daily high to the left, you have a lower daily high to the right. And this one, you have a lower daily high to the left, you have a lower daily high to the right. Same thing over here. I included these two because when we came beneath this low, we didn't really, we just barely touched it. So you could basically just round up and say these are equal lows, right? But still, the concept still applies. Lower daily high to the left, lower daily high to the right. we go the other direction. There's only one time in this entire chart it doesn't work, and it's over here, where if you're crazy enough to trade the Asia session, which is where the Tokyo traders trade from like 7 o'clock to like 10 or 11, where there's no volume, and then you wake up during Europe, it's 3 a.m. and you have the Europe news, right? Like what was it in the UK? They had like some red folder news over there that probably causes volatility at 3 a.m. And you're gonna want to buy that off the like, I don't know. Obviously, most people that are watching are familiar with what I do, understand why this is not very uncomfortable to be in. You're buying after prices already went up. It's just, from what I'm talking about back here with these lows and these highs, you're trying to do the opposite of that. You're trying to basically sell when price is going up at its highest point, and you're buying it when it's going down to its lowest point. You're basically just trading the reversals, right? This would not be You would not be really wanting to do anything, seeing, waking up in the morning and seeing price just go in one direction, because it has nowhere to go from here, right? It'll just continue trending. Sometimes in those environments, you just don't have trades, or I don't have trades. But anyways, let me continue. Over here, it happens more times. Lower high, lower daily high to the left, lower daily high to the right. We started going the opposite direction as soon as we hit it. And over here, same thing. We hit it, we stopped, we consolidated a little bit, and we eventually retraced before continuing to drop lower. Okay, so my point in all this is that when you're looking at a chart, right? There's a reason why these highs that I just marked out work more often than if you just use every daily high. And it's because if you go up a time frame to the daily chart and you do the same thing we use in the daily chart, and you split your days up into weeks with the vertical lines, you'll be able to see the exact same thing occur. I mean, it's very fractal. Or you went down a time frame and you use the 15-minute chart and the 5-minute chart, and you split your chart up into each hour, and then you drew out the hourly highs and lows, and you did the same thing, but now using the hourly highs that have hourly highs that are lower to its left and its right, and the same thing with the lows. Then you would be able to see the exact same relationship, which is that oftentimes when price will come down to I call these old lows and old highs, or long-term lows and long-term highs. So when it comes down to a long-term high, I don't want to explain what I mean every time, the long version. So I just say long-term lows and highs, or old highs and lows. When it comes down to old lows or old highs, it'll turn and it'll go the other direction. You'll see that happen very often. And it's because those lows and highs are more visible on more time frames. All right, so my point is that if you just use each of these highs, for example, this low right here isn't going to be visible on a weekly chart, but this one probably will. Or sorry, no, on a daily chart. So if you go up to where, in fact, I can show you what I mean. Like if I use, let's say it was this low here, right? I'm going to draw this out. I'm going to make it visible in the daily chart. Okay, I'm going to make it a little bigger so we can see it. Alright, now go on the daily chart. And you see how it's not very visible. Not really, it's just one short-term low. Now, however, I'm going to do the same thing with I'm going to use this one. I'm going to make it blue. I'm going to go to the daily chart. And you see how this one is more spaced out, so it's more significant. Why does that matter? Is because now if you go to the weekly chart, I don't know, hold on. You might get the idea. It might not work exactly the way. Yeah, okay. See, it's a weekly high. It's the high of a week, so it's more visible and is visible in more time frames, which is why it's more significant, because price is fractal and it will have a stronger reaction. The more spaced out it is, the more I guess like a tip of a mountain. The more it's like that, then the more reactive it will be. Same thing with the lows, vice versa. So, anyways, I hope that was insightful to some and a refresher to some.